Let me put something unexpected your way. The latest Nifty breakout after 14 months, the one that traders and global desks had been watching and waiting for, finally played out just as the signals were building. It wasn't driven by Wall Street, and it definitely wasn't led by FIs. It was powered primarily by the domestic strength. And yes, retail investors played a far bigger role than anyone expected. Let's break down how that happened. And before we continue, many of you watch regularly but still aren't subscribed. If you want timely, data-driven market insights, the moment they drop, hit subscribe. Now let's begin. Let's rewind to September 2024. Nifty was at 26,277. Confidence was sky high. Investors were celebrating and India looked unstoppable. But markets have a way of humbling all of us. From September to March and April of 2025, the Nifty fell almost 17%, breaking below 22,000 levels. Global markets were rising. S&P 500 was making new highs. But India was silent. 14 months of waiting, 14 months of consolidation, 14 months where investors questioned their conviction. During this phase, your portfolio didn't just fall, your patience fell with it. But while sentiments was low, something powerful was happening behind the scenes. Domestic investors, both retail as well as DIIs, stepped in and changed the market foundation. In the calendar year 2025, so far, DIIs have bought more than 7 lakh crores of Indian equities, which turns out to be the highest in a single year so far. Retail SIPs continue like clockwork. And slowly, a market that once depended on FIs found strength in its own people. This was important because this wasn't loud. This wasn't trending on social media. This was a silent India, showing silent strength. And while the mood stayed bearish, the data turned bullish. Inflation cooled. Forex reserve held strong. Capex spending accelerated. Manufacturing picked up. And corporate earnings, the expectations for Q3 and Q4 of FY26 have seen significant improvement. India wasn't getting weaker. India was quietly getting stronger. And after a 17% correction, valuations had started to make sense again. Then came a small shift globally. The US Fed hinted at a possible rate cut. The dollar softened a bit and overall risk sentiments improved. Now this wasn't a big FI comeback. Let's be very clear. FIs haven't returned in a major way yet. But global headwinds eased and that was enough. It didn't drive the rally. It simply stopped holding it back. The real push came from the India's own domestic strength. Then came the moment. November 27, 2025. The market broke its 14-month silence. Nifty hit a fresh all-time high of 26,310. Sensex crossed 86,000 for the first time ever. This wasn't just another breakout. This was a message that said India is no longer reacting to global cycles. India is starting its own cycle. And for everyone who stayed invested, who didn't panic, who continued SIPs when it felt pointless, this breakout is your victory lap. And here's the part most people miss. From 30th September 2024 to 26th November 2025, Nifty barely moved up by around 1.5%. Sensex also was up around 1.5%. But US S&P 500 jumped almost 19%. So globally, the US led the gains, while India stayed mostly flat until the recent breakout. So in this exact 14-month window, the US markets clearly outperformed India. India's late breakout wasn't being about beating the global markets. It was about domestic momentum finally kicking back in once the headwinds eased. So what does all this really mean for you as an investor? It means the last 14 months weren't wasted. They were teaching you discipline. They were filtering out the noise. They were preparing you for this next cycle. And for the people who stayed calm, who trusted the process, who believed in India, are now sitting exactly where they should be, ahead of the curve. The past 14 months weren't a setback. They were the setup for the breakout, and now the breakout for the next chapter. If you are still watching, you are clearly someone who wants to stay ahead. Hit subscribe and let's ride the next cycle together.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.